the way that I would build a portfolio, and I do go into into detail on this in the book, is I would decide, a total amount that you'd allocate to the silver space. And from there, say 10% could go to physical silver. And then of the balance, so that I would do something like 40, as much as 40% could go to the silver stock ETFs and the larger producers, so the royalty companies and the larger producers. And then from there, 20% I would allocate at most to the growing silver producers and developing companies. And then finally, another 20% could go to the junior explorers. And in each case, you'd want to have a small basket of names within that category, that subcategory, again, just to spread your risk. And not go over, say, 4 or 5% of your overall portfolio in a single stock. When you have the silver ETFs, you can go a little bit higher because they're already diversified within themselves. And from there are multiple ways that you can manage risk. As I was saying earlier, you can have smaller allocations to these types of companies and stocks if you want to keep your risk a little bit lower, especially with the junior companies. You can, for example, take profits if you've had a company, if you've been lucky enough to have let's say you've bought an explorer and they've hit multiple times when they've drilled for silver and they've had some really good results. The stock price could have doubled in the space of, say, 6 months or 12 months. I would suggest selling half. And if it's doubled, you keep the other half invested. You take your profits in cash, and you can either sit on that cash or reinvest that in another investment in that same space, something that you've been following for a while. One of the ways I like to mitigate risk is to both buy and sell in what I call tranches. So let's say you are interested in a silver company. You might say, I've got $500 or I've got $1,000 that I want to allocate to this company. My approach would be to not necessarily take the whole amount and buy it all right away in one shot. I would perhaps allocate a third and watch what happens to the price over the next several weeks or month or so. If the price comes down and the story hasn't changed significantly, perhaps it's just the time of year. There are all sorts of things that affect silver and silver stocks. There's seasonality, and these are all things I get into in the book. But if, let's say, you see the price of this stock go down, again, the story hasn't changed significantly, you might say, okay, I'm going to allocate another third to the stock, and you'll average down a little bit in terms of the price that you've paid. And then you watch it again for another several weeks and potentially make your last allocation. If you see things either stabilize or maybe even start to trend up a little bit, you'd say, okay, now's maybe a good time to place my last allocation to that company. And when you see things run up significantly, you may want to take profits the same way. You may want to sell in tranches, in portions. You could sell off half at one time or a third at one time, and do that over a span of weeks or maybe even a month or two. And again, mitigate your risk. You just don't know how things will play out, but over time, in terms of experience, I can tell you that has tended to do well for me.
Thank you so much for listening, and if you enjoyed the episode, please subscribe and click the bell icon so you are notified when new podcasts are released. I hope you're leaving with some great value about investing, trading, and finance. See you on the next show.